Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage, Eitel.
All right, my name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And you, my friends, are in the right place if you've got questions and you want answers. If you want the data, the real information, not just the scary headlines, not what your Uncle Ned was telling you at the barbecue after he opened his third or fourth cocktail, or Budweiser or Miller Lite or whatever it is. If you want the data, the information, the tips, the tricks, the strategies that you need to go out there and make better real estate and mortgage decisions for you and your family, you are definitely in the right place. We do this every week right here, same time, same station, and we dive into the data, we discuss the headlines of the week, and we answer all of your questions around those topics, primarily real estate, but we'll talk about anything you want to talk about. Old cars, rock and roll, Harley Davidsons, I don't care. We'll talk about it all. As always, I am joined by my fantastic sidekick, my number two. Well, you know what? You're probably the reason why we're still on the air. So I guess I'm your sidekick. But hey, Jen, happy Thursday. How are you doing over there?
Happy Thursday, everyone.
Happy Thursday. Super excited to have Jen with us. She is womanning the Anytime Hotline. She'll get your questions on the air. You can call or text that number, which is 855-462-7292. That is 855-462-7292, also known as the Anytime Hotline. And you might be asking yourself, hey, Mark, why do you call it the Anytime Hotline if your show is only 1 hour long? Well, that's because when we're not in the studio, live on the air, doing all of this magical mortgage stuff that we do, that pushes to my office. So if you need us anytime, you can call or text that number, 855-462-7292, 855-462-7292. Write that down and shoot a text or call that number, and Jen will get your questions on the air. You can also email your questions if you prefer. Just visit mr.mortgage, nevereverever.com. You don't even have to type in the W's. Just go up to the address bar of your favorite browser, type in Mr. and then mortgage, and obviously the dot is the period, and hit enter. Mr. Mortgage, hit enter, and we'll pop right up. In the upper right-hand corner of the page is a contact us box. There you can submit your questions. But hey, we're going to dive right in. There was a ton of news this week around the economy, real estate, mortgage applications falling, interest rates rising, inflation taking a big bite out of all of our wallets, and surprisingly, the administration and the powers that be saying, "What inflation? What? We don't know what you're talking about. No inflation here. Keep moving, folks. There's nothing to see." And if you've listened to this show for any length of time on any one of the stations that we're blessed to be on, you know I don't do politics. That's not my arena. There are guys on the station who do it way, way better than I ever could. But it's just, it drives me crazy. And this isn't speaking to any specific party, but right now it's heir apparent with the Biden administration that there's some tendency not to admit there's a problem in hopes that it's going to go away. Whether it's the trip to Saudi Arabia to ask for more oil production, and then now obviously that's not happening, and we're saying now, oh, no, that's not why I went to Saudi Arabia. I wasn't over there to ask for more oil. It was a Middle East peace mission that we were over there shaking hands and solidifying relationships. And now I heard this week President Biden say that he doesn't believe that there's going to be a recession. And I just, wow, because we're already in the recession by definition. And now forgive me, I don't know the exact statistic, but I think it was 73 or 75%, somewhere between 7 and 8 out of 10 economists believe that we're going to be in the throes of a recession by the beginning of next year, mid next year, some of the guys and gals are saying. So the reality is we all know it. Every time we go to the grocery store or we buy something online or we pay our electric bill, everything's costing more money, and it's interesting to me that we're pretending that we're not feeling that pinch. And I say we, I'm talking about, the smart people in Washington, regardless of their party. I'm not trying to condemn anybody. It just frustrates me to no end that we're, by pretending there's no problem, we're hoping it goes away. But the good news is that real estate historically performs very well in a recession, and it's also a fantastic hedge against inflation, regardless of interest rate. So I think that's super important to focus on. And we're going to talk about the details of that, because it's very easy right now to be convinced any move involving real estate is a bad move. And we're going to talk about why that's not the case. Now, granted, for some people, now is not the time. I will give you that. I'm never going to convince somebody or even attempt to convince anybody. That's not my goal with this show, to do something that they're not comfortable with. Honestly, I don't have any skin in the game whether you do it or not. My goal is just to give you that information so that you have what you need to make the right decision. But I do want to touch on this because, as I mentioned, real estate's historically a good place to be in economies like this. There are a lot of people that are waiting for things to change before they do anything. And guys, that's the wrong mentality. I don't care what the big decision that's in front of you is. You've really just got to take in life the bull by the horns to get things done. And think about this for a minute. There were a significant number of people that waited 2 years ago to make a purchase decision based on the fact that the headlines in the news were talking about the Biden administration and a $15,000 first-time home buyer grant that was coming down the pipe. Guys, we don't hear about that anymore, but there were people sitting at home that could have made a buying decision that said, you know what, we're going to wait because President Biden is going to give us $15,000 in the form of a grant to go out and buy a property. Well, where's that 15 grand? And what would have happened if that person who's waited just, got off the couch, made the decision, and bought a property? They'd have tens of thousands of dollars in equity right now had they made that decision. Last year, there were people who said, we're going to wait because the Biden administration is going to forgive our student loans. And originally, there was no $10,000 or $20,000 number associated with it. People really believed all of their student loans were going to be forgiven, which, guys, don't get me started on that. That's a whole nother topic. I think it's nuts. But anyway, and that's not political. That's just common sense. And, that comes down to encouraging people, or maybe not encouraging is the wrong word, requiring people to take responsibility for themselves. But my point in that is, here we are a year later, and it's a $10,000 number, $20,000 if you had a Pell Grant. And then there was an article I read a couple weeks ago that said, nearly three-quarters of a million people who would have qualified for it based on the Pell Grant and the $10,000 are not going to qualify for it because their loan is being serviced by non-governmental lenders and servicers. So my point is, somebody waited for that $15,000 that never came. Somebody waited for total student loan debt forgiveness, and somebody waited only to find out that they're among that $750,000 that's not going to get any student loan debt forgiven. And what is my point in all that? While all of that was going on, real estate was appreciating, and the cost of money was going up too. So waiting put all of those people in a worse situation. Now, the government's not going to save us. Guys, it's not even the government's job to make our life better. It's the government's job to, I really don't even know what the government's job is other than to, protect us from war and provide us the pursuit of opportunity. It's not the government's job to make life easier for us. It's not the government's job to help us make hard decisions. It's up to us. So I'm not going to go off on a tirade or a tangent. Interest rates are up. Property values are up. We're going to talk about why it still makes sense to buy real estate if you're able to buy real estate. We're going to take all your questions, and we are going to have another wonderful show because we always enjoy being with you. Hey, you hear the music. You know what that means? That is Jen giving me the cue. That's my cue. We're going to take a quick break and be back in 2 short minutes. There'll be more of the Mr. Mortgage Show. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction, and that starts with a really great agent. If you've got a great agent, that's awesome, but if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you heard Ike. You can call or text. I need to slap him around because, well, I'm not going to slap him around because he is as big as his voice. But, hey, Ike, please also mention that you can text that number, 855-462-7292. That is the Anytime hotline. 855-462-7292. And hey, if all of this real estate news and these headlines and all of this doom and gloom is giving you a headache, it made me think of that commercial from a few years ago. Remember that product that was called Head On, and none of us knew what it was or what it did, but the commercial was Head On, apply directly to the forehead. Head On, apply directly to the forehead. I think I'm going to cut a spot and see if Greg will run it that says, the Mr. Mortgage Show, apply directly to the cranium. The Mr. Mortgage Show, apply directly to the cranium. Just in case you got a big, gigantic headache because of all of the doom and gloom real estate news out there. Tune in with us each week and have an hour of fun, and we'll dig into the real information. So at least you're walking away with the real stuff. You know, we're telling you the truth. We'll admit there's a problem, and then we'll hopefully be able to come up with a solution for it, or at least craft one together. A strategy that makes sense for you. But yeah, let's try that. Write that down for me, Jen, would you? The Mr. Mortgage Show, apply directly to the forehead. But anyway, I promise to get to your questions, and we're going to do that right now. So let me throw it over to Jen and see who is number one in the queue.
Mindy is asking, can I get a home equity credit line on an investment property? My bank says no, but when I Googled it, some sites are saying yes. What do you think?
Hey, Mindy, that is a great question. And we get a lot of that, right? Because, you know, almost everybody has a great interest rate on their properties. I mean, we were seeing DSCR loans, which is the landlord loan, in the 4s earlier this year before the market got crazy. And that's traditionally a higher interest rate product. So my point in sharing that is I get it, right? Even your investment properties have super low interest rates, and people don't want to disturb those rates, nor should they if they don't have to. So we get a lot of questions about a home equity line of credit on investment properties. Now, here's the thing. Your bank is not entirely wrong. Actually, they're not wrong at all. There are no home equity lines of credit on investment properties that I know of. Now, if I'm wrong and somebody has information that they can share with me, please do, because I would love to have access to a lender or a lending product that can do that. But here's the thing. You can get an equity loan. So a home equity line of credit is traditionally called a HELOC, HELOC, home equity line of credit. That's the acronym. This is called a he loan. Now, guys, that's not a gender specific. If you're, gender binary or fluid or whatever it is, you can call it a she loan if that makes you feel better, or I don't even know what all the pronouns are, but throw whatever pronoun on there that you need to make you feel good. But my point is, it's a second mortgage with a fixed term. It's actually a loan, so you can't draw against it like a home equity line of credit, because a HELOC, they say, okay, Mindy, you can take $200,000 of your equity to leverage this line of credit, and it's just like a credit card. If you have a zero balance, there are no payments due, but if you need it, you can draw against it and then pay it off and draw against it. Typically, it's interest only for about a 10-year period. That's typical. And then if there's a balance after 10 years, it converts to a loan and you can't draw against it anymore. A home equity loan or a HE loan, it's just like a second mortgage. You take all of the money out, you don't draw against it, and you pay it down over that time period, which could be 10 years to 20 years, depending on the lender. A home equity loan is just like a second mortgage. Those are available on investment property. So I hope that helps. A little less flexible compared to the home equity line of credit, but still allowing you access to your equity without disturbing that first mortgage interest rate that you have on that property. So fantastic question, and I appreciate it. If you need more information or you want some direction on how to get that home equity loan started, I welcome the conversation. Just give us a call at 855-462-7292 at your convenience, because that is the Anytime hotline. But hey, Jen, what else do we have over there? Another question?
Ben wants to know, I listened to your podcast about a rate buy down. I don't fully understand how this works. Can you explain how it works for both the seller and buyer? Thanks.
Hey, Ben, that's a good question. And listening to Jen read that made me realize that oftentimes when I talk about the rate buy down, I talk about it from the mindset of the buyer. So thank you for, including the seller in that question. And I don't know where you are with this. You may be the buyer or the seller, but I'll start, from the beginning and walk you through how this works. So an interest rate buy down is essentially you're paying discount points. So you're paying a fee to the lender to buy the rate down. It's a permanent buy down. Now, there's a 2-1 buy down strategy that we'll cover in a minute, which is not permanent. But a traditional rate buy down, the one that I really, really like and advocate for, is a permanent buy down. So let's say you're going to give a contribution that's equivalent. Let's say you give a contribution of enough money as the seller. Okay, so let's say the seller has a property for sale for, $400,000. And the seller is willing to lower the price to, let's say $385,000, $15,000. Now, he can or she can lower the price and sell the property for $385,000. And then the buyer of that property is going to put whatever percent down of the $385 that they're required to put down, and then their associated closing costs, and they're going to get the interest rate of the day. Now, they can buy the rate down with their own money, but where we see this work out really well is if the seller in this scenario would take that $15,000 and contribute it to the buyer. So he can or she can use that $15,000 to buy the rate down or pay some of the closing costs. So in that instance, the contract would be written at $400,000 with language something like, seller agrees to contribute $15,000 to the buyer's closing costs, third-party fees, non-allowables, and discount points for a rate buy down, period. That sentence will allow that money to be used on the buyer side of the transaction. So the buyer's actually buying it for $400,000, but the seller is gifting $15,000 to the buyer. Now, there are stipulations in how all that works. So if there are certain caveats to that, right? Depending on what percentage the buyer is borrowing, 95%, 90%, etc., will dictate how much the seller can contribute. So At very least, they can contribute 3%. So in that analogy, it would be a $12,000 contribution. But in some circumstances, they could contribute up to 6%, actually up to 9% in some rare occasions. But, that requires a big down payment. But the moral of this story, if you will, or this concept is that before the seller lowers the price, they could take that discount, if you will, and contribute it to the buyer's closing costs and rate buy down. And guys, it can make a significant difference. So buying the rate down 1 percentage point makes a huge difference by comparison to lowering the purchase price. So I want to share a super quick story. I've got a friend, Jasmine. She runs a mortgage brokerage in Boston, and she and I host a weekly conference call for a nationwide conference call each week where realtors call in and they're able to ask any questions they want. It's a 1-hour thing. We do it on Tuesdays. It's much like the radio show, except it's all of us on the phone together. And she shared a story where they were able to take $10,000 and buy the interest rate down 1 full percentage point in this particular scenario. And by doing that, they saved their buyer about $250 a month. Now, that same interest rate, a $10,000 reduction in price would have only equated to about a $50 savings. So you can see by lowering the rate in that example had 5 times the effect of lowering the price. And that's where it becomes a significant difference. So it's easier for the buyer to qualify, and it's easy if the seller was willing to negotiate the price to then just make that a contribution. So I hope that clarifies it. That's a fantastic question. I certainly appreciate it. If you need more information about that, please give us a call. I'll be happy to walk you through it because I know it can be complicated. So thanks for that question. Well, there's the music. You know what that means? That's my cue. We'll be back in 2. Sit tight for 2 short minutes. On the other side of this break, we'll be back with more of the Mr. Mortgage Show. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the rec loan he advertises. Long story short, we did a rec refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And if I sound out of breath, that's because I just did the fastest bathroom break in history. Wow, that's 2 minutes go fast if you're running back and forth to the men's room. But hey, I know, TMI. I apologize, but guys, I'm a giver. I'm a sharer. Full transparency here. Anyway, thanks for hanging in there with us. We're super excited to be with you. We do this each week right here, same time, same station. We warm you up for the main event, which always follows the show, and we're always happy to be with you. So I know Jen is over there giving me the signal that we have a bunch of questions. So let's do a rapid round, and I think I need one of those sound effect effects buttons like Jim Cramer on CNBC, rapid round, rapid round, rapid round. Anyway, obviously I need to work on my sound effects skills. But hey, let me toss it over to Jen so she can get a question on the air.
Renee sent this in. I keep seeing ads for the Hometown Heroes loan. I checked the website and my job doesn't qualify. Are there any other 100% loan options?
Hey, Renee, that's a fantastic question. And hey, that Hometown Heroes loan is really, really a great program. But, you're right. It's not everybody qualifies. It's first responders, cops, firefighters, school teachers, medical professionals. And, if you're just one of the rest of us that go to work every day, then you're kind of locked out of that program. But great question. I'd love for you to call us off the air because, yes, there are several 100% programs. Some are grants, some are forgivable second mortgages, some are outright instantly forgivable upon closing second. So there are a lot of programs. There's a Chenoa grant program in addition to the SHIP programs that everybody's familiar with. But, it seems like each year there's more and more opportunity for that first-time buyer. So super happy to walk you through it. But to answer your question, yes, there are more and different programs available than just Hometown Heroes to get you into a home with, little or no money out of pocket. Now, there are, restrictions, as you can imagine. There are income limitations and things of that nature, but I'm happy to get you more info. But I appreciate that question. Hey, Jen, what else do you have?
Megan is asking, what's the best equity line program? I applied for one online, but the rate seems really high. It's 11%. I've got a pretty good credit in the 700s, so I expected something lower. Is this right? Thank you.
Hey, that's another great question. So, equity line interest rates can vary wildly. And, in my practice, we have equity line products that are available. But, sometimes the banks have a better program. So, I've got a friend who manages a Fifth Third Federal. Sorry, I get those backwards. I know they've got a really aggressive priced program. I always, like to start with the bank because sometimes they treat that equity line product as almost like a client retention tool. And depending on your credit score, the interest rates can, start at, prime minus up half a point. For a while there, it was prime -2, but, prime interest is quite low historically. So you might get prime minus a half all the way up to prime plus, say, 6%. And in that case, a prime plus 6, you might land somewhere in the low double digits. But with a 700 credit score, depending on how much equity you have, you said 700s because 720 is a pricing threshold for a lot of loan products. But if you need some more guidance on that, I think with, a 700s credit score and depending on, how much of your equity you're trying to borrow, there very, very likely is better priced options out there. And I'm happy to put you in touch with somebody that can help. But that is another great question. And guys, we're seeing a lot of that. There's a ton of interest in equity lines right now. And we're providing that as a service for our clients. So we're talking about equity lines almost daily because people want to access that equity without, bumping that first mortgage interest rate that they have that's at a historic low rate. So great question. I appreciate that. We're going to keep it rolling. Let me throw it over to Jen for another one.
Julie has a question. Hi, it's Julie and Tom. We met you and Jennifer at Molly's house. Oh yeah, I remember you guys. Thanks for answering all of our questions. We're going through with buying a new place. Oh my gosh, congratulations, you guys. And we will call you tomorrow to get the loan process started. I'm so excited for you.
Yeah.
Love the show. You guys are great.
Hey, we love you guys too. That's awesome. Hey, and thanks for that. I really enjoyed meeting you. Yeah, I mean, I know there's a lot of people listening right now that have no idea what I'm talking about, but it was a lot of fun meeting you out there. Thanks for coming out. Thanks for supporting the event. I know a lot of money was raised for Molly's house, and we participate in events like that all the time. A lot of them are around classic cars and motorcycles, so don't fault me for that. But anytime we can mix a fundraiser in with a poker run or a motorcycle run in general, we love to do it. And Julie and Tom, you guys were awesome. I really enjoyed it. Congrats on the house. If memory serves me, we were talking about you keeping your current home and renting it out and using that as an income producing property long term, and then going out and buying another place. So I'm super excited to learn more and see if you're going to actually play that strategy out. But yeah, we're excited to work with you, and man, that's so cool. So thanks for calling in with that, and I'll look for your call tomorrow and we'll get you started on that. But appreciate that. Hey Jen, what else do we have?
Here's a question from James. Okay, this is a long question. My wife and I are buying a rental property. We were approved, but now a small collection account popped up on my credit report. It's my son's cell phone account. I paid it immediately. Anyway, my mortgage guy is telling me I don't qualify anymore until my credit is updated, and he says that can take a couple months. We're already in contract, so we don't have the time. Do you think I have any options? Thanks for your help. Wish we would have known about you earlier.
Hey, James. Wow. Okay. So there's a lot to unpack there. So, all right, you're already under contract, you're in process, and there's a lot I need to know, but sounds like they repulled your credit. I'm not sure, but there's a collection report or a collection account that popped up on your report that's unexpected. Okay. Now, I'm curious, did that collection bump your score down, or is it a guideline where there are too many collections within a certain period of time? I don't know any of that, so I'm just going to roll with a few assumptions here. And he's right. It can take a couple months for your credit score to update, but I'm going to treat this as if your loan application was in our system and we were your lender or your mortgage broker. Okay, if you will, there's a tool called Rapid Rescore. So with evidence that you've paid that collection, which should be easy because most of the time you're doing it online, and you mentioned it was a cell phone bill from your son, so you provide the documentation showing that you've paid that collection, and the lender submits it to the credit reporting agency for what's called a Rapid Rescore. Now, there is a fee associated with it, but it can be done quickly, just a few days. And that Rapid Rescore will update your credit report so that you don't have to wait the 2 or 3 months. That would be option one. I would talk to your lender about a Rapid Rescore. Now, if for some reason that's not going to work, I would then consider, if you and your wife are both on the loan application, dropping you and letting her go as the sole borrower on the application. Now, if her income alone is not enough to support the transaction, then I would consider her alone with the landlord loan product that you hear us advertise. It's also called a DSCR loan. The cool thing about the landlord loan is they're not looking for the income from the borrower to qualify for the program. They're looking at solely the income from the investment property. So assuming that there's enough income from the rental property to pay the mortgage, the landlord loan would be an option because your wife's income at that point is irrelevant. They're looking at her credit score and then looking at your assets, and assuming that the assets meet the requirements and the income from the rental property will support the debt, that would be my second option. But there's a lot I would need to know to give you a really solid answer, but you might want to start with suggesting that to your mortgage guy. Can he do a Rapid Rescore, or can he flip you to a DSCR loan? Those would be my options. But if you want me to walk you through that in detail off the air, I am happy to help. Give me a call, 855-462-7292, and I'll just help you write out exactly what you're going to want to ask your guy. I mean, I'd love to be your guy, but at this point, I don't want to, it sounds like you're far enough into this. Just fix it with him and close the transaction so you're able to secure the property because you're already under contract. But great question. I'm happy to help you. And if you want him to get on the phone with me, I'll kind of give him my strategy and see if that helps. That was a great question. I hope that helps. Hey, you hear the music? You know what that means? That's my cue. We'll be back in 2. Sit tight for 2 short minutes. On the other side of this break, Jen and I will be back for more Mortgage Mayhem. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark Eitel and the Mr. Mortgage team.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are still listening to the Mr. Mortgage Show. What is wrong with you? Don't you have anything better to do? No, I'm kidding. We're super excited. We appreciate you. We're very, very happy that you're with us. Thank you so much for spending a little bit of your day with us. We do very, I promise. We do very much appreciate it and love having you with us and always appreciate your questions. So thank you for joining us. If you want your questions on the air, just call or text them to Jen. She'll get you on the air, 855-462-7292. That is the Anytime Hotline, 855-462-7292. And if you like what you hear and you want more of it, check out MrMortgageRadio.com. That's MrMortgageRadio.com. Every day after we end the radio show, we put the recorded version up as a podcast. I think there's probably like 70 or 80 episodes up there now. So there's a lot of my rambling, if you will, on Mr. Mortgage Radio. So you can always check that out. But hey, if you prefer to email your questions, just visit the website, mr.mortgage, never.com, mr.mortgage. And there's a contact us button there where you can type your question in. And Jen not only runs the board, womans the hotline, watches for texts, and she's looking for emails too, so she'll get you on the air. But with that being said, let me throw it over to Jen, and let's see what we have question-wise.
Larry left a message. We're considering a reverse mortgage and have a question. Is the income taxable?
Hey, Larry, that is a great question, and I'm so glad you brought it up. And before I jump into an answer, I just wanted to throw this out there. We're doing a seminar series for reverse mortgages, and I'm speaking sometimes alone, sometimes in conjunction with some financial planners. Did one Tuesday night, and we did one the previous Thursday, and we spoke with a group of financial planners down in Palm Beach Gardens, and man, wonderful questions. So I may at some point do a show or maybe a podcast specific to reverse mortgages, because in conjunction with financial planning, it was really insightful, some of the information that was shared on that side of the fence from the financial team. So there were great questions about things exactly like this, Larry, taxation. So let me jump in with an answer. So the the money that you extract from your home, right? You're cashing out equity with a reverse mortgage is non-taxable because it's a loan. That's your equity. So that money is not taxable. So I hope that helps. Hope that answers your question. And if anybody is interested in that seminar series, shoot us an email or a text, whatever's easier for you, and we'll get you on the guest list for the next one. Just call or text us at 855-462-7292 or shoot us an email, and we'll get you on the guest list for the next one. But fantastic question. Thanks for that, Larry. Hey, Jen, what else do we have?
Winston is asking, how do I find out more about the 100% loan program you talked about a few minutes ago?
Hey, that's a cool name. I met a gentleman not too long ago named Winston. He owns a company that puts in alarms and telephone systems in office buildings. And if you're the same Winston, thanks for checking out the show, because we did talk about the show. He was wiring up the building that our offices are in. But Yaman, if you are Winston from the Bahamas, thank you for checking out the show. But yeah, just give us a call when we're not on the air and I'll walk you through it. As I mentioned, there are several programs, and the one that I'm most excited about right now, and let me just walk you through how this works. So it's an FHA loan. So as long as you meet the FHA requirements, which is, that it's great because those are broader guidelines compared to, a traditional quote unquote conventional loan. So it's an FHA loan product. You borrow 96.5%, and then there is a 3.5% second mortgage placed on top of that. Well, here's the really cool thing. That is a forgivable second, and it's forgiven at closing. So it doesn't hang around. There's no debt. You don't have to pay it back. It's a really cool way to get 100% financing. And one of the super exciting things about that program is the seller can contribute up to 6%. So with a seller contribution, remember we talked about that buy down strategy a minute ago where we were using the seller's money. In this case, we're not using it to buy the rate down. What we're using it for is to pay your closing costs. So you can come out of pocket with very, very little money, if any at all, compared to a normal purchase. And you're getting into the property with 100% financing, FHA guidelines in that forgiven second. So it's a super, super exciting loan product for people looking for that 100%. Other 100% loan products include the USDA loan. So if you're in a rural area, but you want to think rural, if you're looking at USDA, VA loans are 100% financing. There's the Chenoa grant program, and then there's 4 or 5 other grant programs. Obviously, Hometown Heroes is what everybody's talking about right now. But if your job category doesn't fit their requirements, there are loads of other programs that are out there. So super excited for you. Happy to answer more questions. And even if a 100% loan program doesn't work for you because of income or whatever other reason, we may be able to craft a strategy with a seller contribution and buying some, the rate down or paying some of your closing costs with that money. There may be a way to get into a property. And hey, while I'm thinking about it, you heard me talk about it in the opening of the show. And if you say, what show is this? I just stumbled across this crazy mortgage guy. You are listening to the Mr. Mortgage Show. We do this each week. We answer all your questions around real estate and mortgage. We deep dive the data. We debunk the myths and give you the info that you need to make better real estate and mortgage decisions for you and your family. That, guys, is what we're doing every week. So hopefully, Winston, that helped you a little bit. But you heard me talk in the open about how real estate historically is a great hedge against inflation. And what do I mean by that? Well, guys, anybody who's renting right now has experienced it firsthand. If you purchased a property and you've got a fixed rate mortgage, your payment is going to go up very, very little each year. And it's only going to go up because of taxes or insurance. Your principal and interest mortgage payment doesn't change with a fixed rate product. And if you've been renting, you know how often the landlords and how much, right? Wow. We've seen some crazy big jumps in rent. Well, if you own your property, that doesn't happen to you. And if you would have purchased 2 years ago, you'd have, tens of thousands of dollars in equity. The last statistic I saw that was, very conservative. It's a nationwide number. In Florida, it's a larger percentage, but we've experienced 40% appreciation since the beginning of the pandemic. So if you bought a property, 2 years ago for $300,000, well, you're sitting on $360,000 property right now with $60,000 in equity that you didn't have to cut out one Starbucks. You didn't have to cut out one 6-pack of Modelo. You didn't have to cut out one weekend adventure with your honey down in Miami or on the cruise ship. My point is, you didn't cut out any fun. The house saved that money for you, and your mortgage payment didn't change. Your taxes might have gone up a little bit, but nothing like people who've been renting. I want to share a very quick story with you. We had an interesting conversation with a client this week who's been renting the same condo for a little over 10 years, and she's paying $1,600 a month for the condo. And guys, that is a fantastic rental rate by comparison to anything in the market. And that's why she stayed there this long. Well, guess what? The landlord is selling their big house, capitalizing on all the equity that they've gained, all of the appreciation, and they're taking $500,000 tax-free in gains because that's the rule for a married couple, and they're moving back into the condo. So she's getting booted. Here's the thing. Condos in that building are renting for $3,000. So she's essentially being forced to pay double. She said, I can't afford to buy at these prices. Well, guess what? She's buying a condo in that building, and her mortgage payment's going to be just under, and I mean just under, $2,500 a month. So let's call it $2,500. So there's two ways to look at that, right? Now, I would have loved to have this conversation with her 2 years ago, but my point in this is today. This is real data based on today's prices and today's interest rates, and this is why it still makes sense. So her choices are rent for $3,000 or own for $2,500. So I can show you in that example how, yes, her cost to live in that building just went up $900 a month, right? Compared to $1,600 a month was what she was paying for rent. But that's not the case because she doesn't have that option anymore. She's saving $500 a month by buying because the average rent in that building is $3,000, and she's building equity. Here's the super cool thing. Should she ever choose to move, we know she can rent it for $3,000 a month because that's what everybody else in the building is renting for. So she could put $500 a month positive cash in her pocket. Yes, prices have gotten out of control. Yes, it would have been better to do it 2 years ago. Yes. But the reality, guys, is it still makes sense in many, many instances. And it's not for everybody. I totally get that. And I'm not trying to blow, rainbows and sunshines up your unicorn. What I'm saying is look at everything logically, detach the emotion, and base things on today. We talked about it earlier. Biden was going to give first-time buyers $15,000. They were going to forgive all this debt. Guys, it's not happening. She could have been waiting for any number of those things to happen, and they didn't. And here she's faced with a choice. Rent for $3,000 or buy for $2,400 and change. Let's call it $2,500. She's saving $500 a month. So anyway, I share that story only to paint the rest of the picture, if you will. And I hope that helped. I welcome the opportunity to deep dive if you need me to. That was a great question. Thank you for that. We do appreciate it. But you hear the music. That's Jen's cue to tell me to stop talking. That's my cue. We'll be back in 2. Sit tight for 2 short minutes. On the other side of this break will be more of the Mr. Mortgage Show.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you heard the man. Call or text. Call us now. I can't do the voice. That's an awesome voice. You know, the only person that has a better voice than that is Cliff from Swap Shop. And let's throw a quick get well soon out there to Cliff. I hope you're feeling better, brother. I was talking to Jen during that break, and we've got a couple more questions to get. I'm going to throw it over to her and squeeze another one in. Jen, what do we have?
Margie sent this in. I've listened for a while and I'd like to learn more about a reverse mortgage to purchase a home. You've mentioned it a few times. Can you explain it in more detail?
Hey, Margie, that is a fantastic question and another reverse mortgage question. Guys, you got to get on the list for that seminar. We're having a lot of fun doing it, but I'm going to paint a very quick picture for you, and I'm going to use my client reference down in Wellington, and she owns a property, free and clear. It's worth $500,000. She's on a fixed income, so she's hesitant to sell that property and go buy another property because she's going to have to pay more property taxes, higher interest, all the things associated with buying a higher valued property than the property was when she bought it, because she's got the homestead exemption, so her taxes are low. She's got the insurance coverage that's low because she doesn't have a mortgage. So buying a new property is going to raise her cost of living, and she's concerned because she's on a fixed income, right? So we got that part. The property's worth $500,000. If she sells that property and takes that $500,000, she can put $250,000 in the bank, in her portfolio, put it to work. Take the other $250,000, put it down on a property in that super cool new 55 plus neighborhood with the bus that takes you to Whole Foods and the pickleball courts and the golf carts and the, arts and crafts on Wednesdays at the clubhouse, right? The very active senior community where she wants to be around her peers and live, that active, fun life. She's never going to have to make a monthly mortgage payment because she's buying it with the reverse mortgage in place from the purchase. That's essentially how the reverse mortgage works. Because she's using that reverse mortgage to purchase the property, she will not have to make a monthly mortgage payment. Now, she is going to be responsible to pay her taxes, her insurance, any association dues in that neighborhood, and then maintain the home in good living condition. So that is basically how a reverse to purchase works. You're taking the reverse mortgage right at the purchase, and you're just not having to make that monthly payment. So I hope that helps, Margie. It's a great question, and it's a strategy a lot of people are unaware of. They don't know how it works, and I love it. I think it's an amazing opportunity for people to upgrade their lifestyle and maintain or reduce their monthly expenses, and they live happily ever after if done right. So super, super cool loan product when used correctly. I really appreciate that question. But guys, we're at that point of the show. My favorite point of the show. No, that's not true. My favorite point is your questions, but I'm going to ask you for a favor. If any of this resonates, if you enjoy this crazy mortgage mayhem that we do every week, if you like what you hear, if you think other people could benefit from it, please share the show. You can find all of the back episodes at Mr. Mortgage Radio. That's MrMortgageRadio.com. But more importantly, if you got friends or family or coworkers that are out there thinking, is this a good time to buy? Is it a good time to sell? Should I refi? Should I take an equity line? What do I do? The news has me scared. Please introduce them to us. I would love to help them. I'll be happy to answer any of their questions. I'd love them to become a listener. If they need a mortgage guy, heck, I'd like to be their mortgage guy. I appreciate it. I'm hoping I can count on you. We're out there Pied Piper in this show, and I'm hoping I can count on you to spread the word for us. So with that being said, we are going to wrap things up. It was another wonderful week. Hey, Jen, say goodbye to the folks.
Goodbye, Jen. See you next week.
See you next week indeed. Guys, we'll be back here next week for more of the Mr. Mortgage Show. We do it every week right here, same time, same station. We'll get to all your questions. We'll give you the answers you need to make better real estate and mortgage decisions. Don't forget, spread the word. You can find more of the Mr. Mortgage Show at MrMortgageRadio.com. That's MrMortgageRadio.com. or check us out online at mr.mortgage, no.com, just mr.mortgage, or give us a call at 855-462-7292. Guys, have a fantastic week. Jen and I will be back next week right here, same time, same station.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.